And I'd love to get some hangout music. But anyway, hello everyone. Welcome to CRInvestor and LowPro's Trading Plan Show
Hey guys.
for Saturday, April 19th. This is number 4. Hello, Landon. Good evening.
Hey Brian.
How are you today?
Oh, doing fantastic. Having fun with all the price action
Good,
on
good.
Bitcoin.
Um, Yeah, for all those out in internet land, this is, I guess, our 4th show. Landon and I have done together. I am a financial planner broker from years gone by, so I like specifically to do a show at least once a week on trading psychology and trading plans. Whoops, there we're live now, so we know we're good to go on YouTube.
From years gone by, huh?
Beg your pardon?
I said from years gone by, huh? It's been that
Well,
long.
I've been playing this game an awfully long time. And I guess just the point that I try to make for today's show is, a lot of people are really concentrated on, the specific price action and who did that and why this happened, why that happened. I like to take some time just talk a little bit about how trading affects you psychologically. Are you getting stressed out? Do you have a plan? Are you sticking to your rules? And if you are, and you follow my 2 rules of investing, then really, ironically enough, this just becomes more of a business, and you shouldn't get too emotionally attached with the trade. So anyway, I'm babbling here. So welcome everybody out in internet land. Welcome Landon. I see we have somebody in the lounge with us. Darren. Hello, Darren. Ken Darren Harris.
Hey.
You were there a second ago. You might.
Hey guys, hi.
There he is. Anybody who is watching on YouTube, if you'd like to be a participant in the lounge, I'd love to have lots of people interact through these experiences. You're more than welcome to come. Theoretically, the YouTube link should have been posted on my Twitter feed. Let's see if that happened. Yep, so that's up and running. I'll also post the Google Hangout address, so anybody who's following me on Twitter, they can get that. So while I'm posting this, why don't you tell me, Landon, about your trading week and your psychological journey through, I guess you're specifically trading Bitcoin. So tell me about your psychological experience trading Bitcoin this past week. Go!
Oh, well, that's actually been pretty good. Here, let me get my screen share up here. Pull up trading view. Okay, so here's the chart I've been working with. For the past week, it's actually gone pretty well. Of course, we didn't start out too well. Right off the bat, and things got a little fuzzy, especially down with the initial crash, because I had ended up diverting off my plan sometime prior to that. I had a plan set up. I ended up shorting pretty much the top of this range here, and had my target down right into the 400s just for closing it. And it ended up closing it way too early, which ended up throwing me off my game quite a bit and never actually put in back to the trading plan. So I hadn't lost any money, but I ended up making a lot of mistakes in throughout all of that yummy price action and all that volatile range that ended up not making me as much money as I should have.
So it's an interesting comment. So what I just heard was maybe we got a little bit away from trading plan, and as a result, we sort of left some opportunities on the table. Is that what I'm hearing?
Oh yeah, yeah, a huge amount of opportunities. I mean, it got to the point where I was so upset at myself that I was in denial of what was actually going on. So you would have these monumental spikes coming up to the rise towards the bearish trend line, and I was shorting the tops of them. And of course, I mean, as anybody can see, we have continuation pattern after continuation pattern after continuation pattern, and even though it is possible to make money shorting the very tip tops of these things, there's certainly a lot more money to be made on just going long and walking away from your computer. So I went
Bet it and
the
forget it, as they say.
Yep. So I went the much harder, much more time consuming and much less profitable route up through this surge. So and I ended up being long a few times within this, but it a real trading plan was never really established until I'd say right up to the last run up, the last where we were getting right up to the top, and at that point I knew in advance that we had that 3-day push, and we were coming up to the 6-month midterm bearish trend line, and I knew that that would be, and all the indicators were certainly pointing to it, the OTE short sweet spot. So we had set that up, and I actually I actually was awake for all of this and hadn't set in a limit. And I was talking to guys, telling everybody, hey, short 435, 440, 445, that entire range, short everything you got. It's coming down at that point.
You mean
And
500 or 400?
or I'm sorry, yeah, 530, 540, that range. And
Oh, that slight fat finger might cost you in the market. Be careful.
well, the funny thing was, is since I didn't have that limit in there, and this was like at 2 o'clock in the morning for me. I hadn't gotten any sleep, and what I'd done is I'd actually went long at that like that 530 range with the intention of shorting the 540 range. Just a little play on a really short action. Well, I passed out at my keyboard
Oh no.
and woke up to this. Yeah, I woke up to this. I had this all plotted out too. I mean, I had it perfect on the money, and I woke up to that. Um,
Were you still short at that point?
no, I was
Or
I
were you
was
still
long.
long? I'm sorry. Were you
Yeah,
long?
yeah, I was still long.
Ouch.
But I braved it out, and I ended up holding it till it came back, actually past the point where I had it, and I actually had made a profit, back into that short sweet spot, and then was able to finally close my long position, short it, and run it the way down. Um,
Wow,
so
good for you.
so that was fun.
That took cojones.
Yeah, no, that part was not fun. But after re-entering the short sweet spot, we had uh, a not a flag, but I went completely blank here. Uh, uh, Pennant. Yeah, that's what I was thinking of. Here we go. Where there you go. Okay, yeah, we had a bearish pennant, and then this is when we were talking about that. Oh, uh, the last show with
Actually, yeah, when you and I were chatting about that, because I'll talk about, or maybe that, no, I guess that was just before.
yeah, you were talking about the Gartley,
Yeah,
right
that
up in here,
show, that
and we
you
ended up
see
having a failure.
that
Yep.
double top, that red box,
Mhm.
that was right where your cursor is. That was a perfect Gartley pattern.
Mhm. So we had both of those patterns coming in, both right into the trend line. So I knew it was an absolute perfect spot to short. And then from there, I'd pretty much listed a measured move from the last drop over, and look where it landed. Right, here we go. From here, and landed perfectly right down at that 486,
That
487
how it
range.
does that, eh?
Oh yeah. And then from there we essentially started out with a small short channel working its way through. And then I was actually expecting that a second time. I was actually expecting it to run up a little higher. I ended up shorting this 500 range and having it come down. Ended up killing it right near the bottom. But what, to my surprise, I mean, I was actually my my OTE long sweet spot was much deeper. It was right in down close to that 50% retracement range, and we didn't even make it close to that.
Is the top of your box there the 61?
Yes, yes, it
Yeah,
is.
so that's something you should know. You see, my 61, my OTE long sweet spot, still quite a bit further down
Hmm.
for her. Oh, sorry.
So it bounced right off my box, but I was able to on the basically the double bottom of that movement right there. I was able to get in at 474, where I've been just sitting back and being happy. But as far as current price action goes, I'm actually considering the same sort of setup. Right here we have the. And I think this is, yeah, I think this is actually a little uh, a little short here. I always put that trend line down closer to remind me that uh, we're right up next to the bear's trend line, and to cover all long positions at that point. But this is definitely, for me, I believe, a move that could potentially break the midterm bearish trend line. I mean, the possibilities there. I'm not really sure if it's a shorting opportunity per se, just because of the risk that it might break through that. Of course, if it does fail, it's going to be a fun way down. But at the same time, I would say it's definitely a good spot for me to cover in that sort of situation.
So tell me about your emotional thinking and your mindset buying there on that double bottom test.
Well, basically, I looked at some other charts. I had a lot of it was looking at Willie on the 15 minutes, the 30 minute, the 1 hour, the 2 hour, and the 4 hour, and comparing that with MACD divergences, comparing that with RSI, and then kind of pulling back and seeing this whole movement all together. And I, even though it was just right above my OTE uh, uh, long spot, it was one of those moves that I thought, well, I'm here. There is definitely some evidence of a potential rally, and uh, at the time there was a very
What
thick
was the
order
evidence
book
of a
on the.
potential rally?
Oh, what?
What was the evidence of a potential rally?
Well, basically, a lot of the indicators were pointing at a.
Show me, show me. I'm from
Oh,
Missouri. Show me.
sorry. You are?
No, that's the old saying, right? Missouri is the show
Yeah,
me
show me
state.
state. Yeah, yeah. Let me
No, I'm
pull
from
up here.
Missouri. Show me. Don't just tell me there are. I want to know what they are. Tell me. Show me.
Well, this looks all jumbled up here. I'm getting it down. Okay, so the last time, let's see, last time we had the Willie indicator.
And what I'm looking for, right? This is our trading plan, my psychology show. So what I'm looking for is what was your mindset, and you can show me all the indicators that influenced your mindset. But what was your mindset, and what brought you to the decision to say, you know what, the market should rally here. I want to be long.
Well, it was coming up to that point 38, and then at the same time we had. Let me kill some of this stuff on the
38.2s
technical.
are awesome pullback levels, aren't they?
Oh yeah. So we were coming up to the 38.2. and then we had that original pump. So we had that first push, we had that second push, um, and then after that initial pullback, it actually looked very, very similar to me from that actual launch from where was it, that $400 level, and at the same time, Willie had gotten down to pretty much as low as it was during the initial crash down to the 340, 350 levels. So it pack that on with the fact that I was sitting there and watching the price action, and the bids were just stacked heavily against the asks, and it was pretty much one of those things. Just like, well, it's above where I want it, but there's a high percentage of seeing some movement here. So if I had to cover, um, I wouldn't be at much of a loss at all. I mean, just a very tiny cover because I had so much support right behind me. So I pretty much got in right at the top of that list as it was coming down at 474 and got filled.
So you parked your order in front of all the size? Is that what you're telling me?
In front of all the other bids.
Yeah.
Yeah.
Okay.
And then
And like, I believe it or not, the the process of becoming a professional trader is really the process of intuitively understanding what the market is telling you and then being able to react on that information. It's very similar to like a golfer, looking at a putt, or a basketball player, getting ready for a field goal. The
mhm.
point is that especially new people to trading, um, and really, I think the best analogy I can personally think of is just riding a bicycle. You know, um, if you just grab a bike and you want to go for a bike ride and you've been riding bike for years and years and years, you don't sit there and say, okay, well, I put my foot on the pedal and I try and balance the bicycle and I slowly rotate my feet and I want to keep a circular motion. You don't think of all those things. You just get on the bike and go. And that in itself is a level that you have to reach. And so a lot of new people to trading, they're not quite sure what it is that they're looking for. So you have to get to the point where you know what you're looking for. And then, just because you have gotten to that point, you know what you're looking for, then you have to be able to just instinctively act. And so,
A big thing
comment?
for me is I'm a big momentum trader, and I saw for me this MACD bullish divergence closing very rapidly on the 2 hour mark, and I'd been watching that back and forth too between the 30-minute and the 1 hour, and basically from what I could tell, coming up to that 38.2 mark was that ever since that top point, the Bears had been losing momentum, momentum, momentum. I mean, it was getting to the point where they were having a hard time pushing the price down much anymore at that point. And so that with that stacked bid side seemed like a pretty good opportunity to put some money on the table, right?
Yeah, and so, the definition of a good trade, I can see you can sort of see a trading plan sort of even developing here, just based on the criteria that we talked about here.
Hmm.
And really that's sort of the value that I want to drive home today is, I would prefer people actually have trading plans actually written out. If you're new to trading, I will act when I see this. I will act when I see that. And so, just looking at your chart, and that was, let's see if I can pull that chart up. Um, that's the Bitcoin Wisdom site.
Hmm.
You like to follow the Bitfinex?
See, I'll go back and forth between Bitcoin Wisdom and TradingView, and I'll have
Right.
basically my map, my roadmap with TradingView, and then I'll watch price action as it comes in with
Um,
Bitcoin Wisdom.
okay, and so then you like to have a MACD on there?
Oh yeah.
And so, we can just simply surmise, for anybody who's watching, this is a very simple approach. This is a 1 hour chart of the Bitfinex, if I'm even pronouncing it right.
Yeah, yeah, you
Uh,
got it.
Bitfinex. And, what I see that's jumping out to me that Landon's talking about is lower lows. And yet on the momentum indicator, whoops, can we put a line on the momentum indicator?
No, no, you can't do that.
You can't put one down here?
Nope, nope.
All right, so we'll
That's a
try it
TradingView thing.
a little differently. We'll capture.
Flipper has a cool tool to draw on the page though. It's called
Well, yeah,
Awesome
I mean,
Screenshot.
basically, I'll do a screen capture. Da, da, da. I'll just capture all of that. All right, so then for you guys, we'll zip over here, and I think this should do it. What do you guys see now? Do you see the chart? Hopefully you guys see the chart. I see a never-ending cycle. I don't know what that means. Do you guys see the? Yeah, okay, you do.
Yeah, yep.
Right. So when I just look on my Jing here, what I'll do is, well, we'll just make it really simple. We'll copy it. Oops. And then we'll go paint and paste. All right. Okay, so now let's get you up over here now.
Now we got it complicated.
Oh no, we're there, we're there. Okay, so hopefully you see a, screen of this MS with that chart. Is that what you guys see?
Yeah, yep.
Okay. So anyway, the point that I would just make is that, and this is a very simple tool that those watching in the YouTube audience can appreciate and just, add it to your trading plan. And that is the market was making lower lows. So, we had a, let's see, maybe we can do it like this. So we had a low here, and we had a low here. But at the same time, the momentum indicator was making higher lows. So this is basically what's called a momentum divergence. So the momentum indicator was making a low when we made a low on this box. And then when we made a lower low in price, the momentum indicator itself did not make a new low. And then what you'll see is, to add insult to injury, the momentum indicator on the next go down didn't even turn negative. So again, a higher low. And then it turned positive
And boom.
above this breakout. So in essence, you had higher highs and higher lows on the momentum, but you had lower highs and lower lows on the price. Couple that with what's called a descending wedge, and this usually resolves bullishly when it breaks out. So,
And right at the perfectly at the point 38.2. Well,
of the
nearly at
higher
the
time frame, you mean?
at that bottom right there,
The
right near the
473?
yeah, or the point 382 FIP.
Yeah, and that's off a higher time frame chart.
Yeah.
Yeah. So, for the record, those people that are watching the YouTube video, there's a nice simple lesson. This is called a bullish momentum divergence, and the resulting price action is usually bullish. I mean, I find it interesting. Frankly, I wouldn't have had the cojones to step in here, but basically, Landon's telling us that he bought in this window right here, which you got to give him props. That's a hell of a good trade.
Well, we had the bears pretty much being exhausted at the same time that we were coming up to that fib level, and we had the as we were coming up to that point, we were also having that double bottom. So it was one of those things that I saw it. I saw it eventually uh, it playing itself out higher than that point, even if I did miss it. And say if it did drop down another $10, where I wanted it to be in the first place. Basically, it was either okay. Do I get the very, very bottom of this action that I know is going to result in up, um, and risk the chance of not getting in, or do I get in now at this double bottom potential and risk missing out on a 10-point move? So
Well, took kahunas regardless, so well done. Um, all right, so it's now about 5:30. I see people are slowly trickling in, so we might as well get started in earnest. Um, as I've outlined previously, and I'll say once again, this is our trading plan show. So I want to try and put more emphasis on creating plans and working around those plans. Talk about strategies, talk about setups, talk about psychology. I'd be very interested when through Landon's presentation to hear about how he talks about how he felt through that trade experience. Was it a hard trade to do? Was it an easy trade to do? Those kind of things. I always like to start I'll take the next maybe 20 minutes or so and just talk a little bit about my spiel. I always like to start these trading plan shows with just a quick overview. You can learn all about how I approach investing as an investment advisor. Let's make sure you guys can see that screen. Basically, I wrote a short course on how to invest, gleaning from the years that I've worked both as a trader and an investment advisor and an individual investor myself. So you're more than welcome. Basically, the document sits on the internet free of charge to anybody who feels like reading it. And there's the address for anybody in the lounge who wants to go. And I always like to start off this trading plan show with just a review of my simple 2 rules of investing. If you follow the rules, it actually becomes very difficult to lose money over the long term. But the problem is nobody likes the rules. So what are the rules? First and foremost, we have to think of investing and trading as kind of like it's a business unto itself. And so that means that, kind of like Ford and the Model T, basically he figured out something that works and then he just did it over and over and over again ad nauseum. And basically that's the production model for all successful modern day businesses. Economies of scale, and then if something works, just keep doing the same thing over and over and over. When it comes to trading, really it's kind of the same thing. We want to identify setups that have worked over the past and that we feel confident that will work in the future. So, Landon's little scenario there, of watching for 38.2 fib tags and a momentum divergence and a volume divergence, and then looking at the DOM and assessing sort of who's in control. That to me sounds like a very good model. And if all of those criteria are met, my hunch is that it would probably meet CRI's rule number 1 of investing. And that is that we basically need to come up with some sort of algorithmic approach to our investment making decisions. And we have to have 100% confidence in our plan. Now, we're humans, right? So we all make mistakes. And the plan, CRI's first rule of investing says, you know what? You can be wrong a third of the time. 33% of the time you want to step up to the plate and you swing and you strike out, that's perfectly fine. This rule in itself was just devised over many years of working as a broker, and seeing people who would work with plans that sadly actually didn't produce those kind of results. Turns out that maybe they're only accurate like 40% of the time. So having an algorithmic approach that is going to be correct 66% of the time, that's a tough process to go through to really actually get to that stage. And again, when I was asking Landon earlier about this trade setup and why did he take it, you could hear the confidence in his voice when he said, well, I saw a bunch of indicators that lined up, and basically when I see this happen, then I know I got a pretty good chance of making money. The key here, what I have learned, and this is a very hard thing to learn, is we need to be less concerned with our percentage accuracy than we need to be concerned with about making sure that our average winner is bigger than our average loser. And I'll just take a couple minutes to talk about this. I did a seminar recently with Dr. Andrew Menaker, who's employed by the proprietary trading firm that I work with, and basically spent a couple hours this past week just talking to us about exactly this. We as humans, unfortunately, we really need to be validated by the market, but the market itself is a very chaotic place. And ironically enough, what ends up happening is a lot of sort of engineers and really brainy people come to the market figuring that, well, I can figure out this thing, when ironically enough, the market is really a proxy of human emotion, and it's absolutely chaotic. So what ends up happening is that we end up attaching a lot of our ego to actual performance. And a lot of people that are in the scientific community, it's really important for them, it's sort of a self-validation that they figured this out and that whatever they say is going to happen actually happens. And the irony about trading, and what I've learned with my 3 years direct experience working with this proprietary trading firm, is that those that attach ego to the outcome of the trades often are heading down a dangerous path. So what ends up happening tragically is, in an attempt to validate your ego, you end up booking a whole bunch of sort of small wins, maybe 5 ticks plus 10 ticks plus 7 ticks plus 3 ticks plus 8 ticks plus 9 ticks. You look at your performance and your accuracy and you say, hey, my model's like 90% accurate, aren't I awesome? But then all of a sudden a trade comes along that goes against you and you're down 30 ticks, down 40 ticks on the one trade. And so what ends up happening is, yeah, your accuracy is great, but your actual profitability might be in question. And you may actually end up losing money in the end. So, and that is directly a function of our ego. And so what we as traders need to do is understand that nobody is right 100% of the time. And as soon as you attach your ego to trading results, you end up actually heading down a dangerous path. If we can somehow get to the point where it's far more important to us that when we are right, we get paid, and be comfortable with booking losses. And even the people that I work with in Chicago, they're even comfortable working with 50% accuracy, just as long as that when they are right, they get paid 2 to 3 times the amount of money that when they're wrong. That's a very, very hard hurdle for new traders to get over.
In fact, most of those guys, anything over 50% is considered really, really good.
Well, if you strictly adhere to the principle of booking, say 2 to 1, 3 to 1, 4 to 1 wins over losses, then just even batting 50%, you'll find that your profits just start to accumulate like crazy. But the problem is that our ego gets in the way, right? And I see it on TradingView. People are constantly posting, oh, it's going to break out. Oh, she's going. You mark my words. I'm calling the bottom. I'm calling the top. Where it's more important for people to get sort of a validation from the herd than it is to actually make money. And
There's been a lot of that going around lately.
Right, and that in itself is a dangerous game. So the point of all this conversation is that as a broker, I sort of distilled that whole process down to a simple rule, and that is that if you can try and shoot for 66%, which is basically 2 out of 3 times you swing the bat, if you can somehow ensure that who's that's making all that damn noise? Bodie.
Sorry.
I think we need to excommunicate you, sir.
I'll mute my.
Anyway.
Is that like you're eating chips?
Yeah,
like really big chips.
Anyway, so the point here is if you can let, and this is a process that I'm going through on a daily basis. Trust me, it's not easy. But if you believe in your model, and you will see your model out, as long as it's accurate 2/3 of the time, and that when you pull the trigger, you can realistically expect 2 to 3 times what you're willing to risk, then that's the key to success in this game. There are a number of setups that I use, and in fact, I'm in the market right at the moment, and one setup is working, so, we'll see how it plays out. We'll get to that in a bit. Just to finish off this little piece that I always like to talk about, my 2 rules at the beginning of any presentation, especially if we're talking about trading plans. Rule number 2 is all about risk management. It has absolutely nothing to do with trade signals or markets that you trade. It has everything to do with how you manage yourself and how you manage your portfolio. You could be trading chickens, you could be trading bitcoins, you can be trading penny stocks. It really doesn't matter. Rule number 2 doesn't change at all. The point of the matter here is it's all about being able to stay at the table indefinitely. And it's derived from the guys who play poker in Vegas for a living. So it's not even taken from the stock market. But the simple rule is don't risk more than 5% of your stake, or what it is that you have to work with, on any one single trading idea. So what does that mean in real terms? There's 3 different ways that you can approach that. You can say, you know what, I'm going to take X amount of dollars. If it's 5% of my whole stake, well, so be it. I'm going to plunk it into this idea, and I'm going to risk 100% of it. So, if you had $10,000 portfolio, and you took $500, and that was your Bitcoin fund, well, you could go and buy yourself 1 Bitcoin and risk the entire amount. That's perfectly fine by me. Another way you could approach it is you could say, well, I'm going to work with my 10,000. I'm going to put 1,000 into Bitcoin, and I'll risk 50% of that investment. That's that $500 number. That's fine by me. And then the higher leveraged in the way we play the futures market is basically you go and put on a contract, whether it be on margin or whatever, and your risk on that one particular trade, if we were working with 10,000 and I went and put on a crude oil futures contract, well, I could risk 50 ticks movement on that crude oil contract, or basically that's $500. So there are a number of ways to address that second rule, but the bottom line is as soon as you hit your uncle point, if you're a professional at this game and you're not an amateur, then you will act appropriately and cut your losses. And, again, that sort of speaks to ego, in that, admitting that you're wrong and that your setup didn't work is in essence, a lot of people put personal value associated with that. And really, professional traders, they just don't associate personal net worth or personal value with the trade setups. Just one trade setup comes along, it either works or it doesn't. Next bus will be along in 10 minutes. Just as simple as that.
And for me, 5% is I believe actually really high for me, because I make extra sure checking all the time frames, I mean, like each individual indicator with each individual time frame, and pre-plan a setup within a setup down to more of the 15 and 5 minute mark, just to make sure I don't have to backtrack at some point. And if I do have to backtrack, it's within a substantial move. It's like I don't like risking any more than 2 or 3%, but want much larger moves.
In fact, a lot of the fund managers that I've worked with, I've made reference to Mr. Huddleston and his inner circle trader, and quite a few others that sort of industry standard. That's basically the accepted number. Is 2% would actually be a very high risk threshold for them. So I like to use the 5% number because really, it's a nice, easy, round number for the public to work with, and 90% of participants, I would say, in something like, say, Bitcoin or something, are going to be working, off of sort of position trades, swing trading, if you will. And, if you can even just get them to the point where they put on 20 trades in sort of a calendar year or something, then those statistical models play themselves out pretty well. If you go less than that, obviously, they have a higher degree of less risk. Less than 5% means you can do more trades, which means your statistical model has a better degree of accuracy, blah, blah, blah. But yeah, so I would agree with that point.
You remember that guy we had in here, I think it was this past week, that ended up shorting that, I think it was what, 350, 360, something like that.
Oh yeah, yeah, and he was sitting underwater. Yeah.
Yeah, like for the whole thing, never cut it. And I think he was down what, 60, 70%. I mean, he's getting close to margin call with it. Yeah.
It makes you cry when you hear about the stuff.
It's just a simple.
Actually, that leads into sort of my next topic of conversation. And that is, I thought what I'd do during my sort of section here is I would talk about a trade setup that did occur for me, and it actually went a bit awry, and how I handled it. So basically, I run what I call the bot, and let's see if I can find it for you here. For those that are interested in the bot, let's see if I've got it here. Actually, this might work well. Let's see. Yeah, you can see my screen. So I've just been writing up these summaries, but basically the bot is one model that I run. And you're more than welcome to go to this Google document. It's a shared document out on the World Wide Web, and I'll plunk it into the chat room so you have it. Not finished product. I haven't started selling it yet, so still a few things to work on. But nonetheless, this slide here basically details how the bot works in a typical trade setup in crude oil. In essence, it's a bullish A, B, C, D pattern. And ideally, what I like is if the D point can be at a higher time frame optimal trade zone. So we had a setup here on BTCE. On my BTCE on the hourly chart, we had a rally that started at 386. Well, no, I guess what did it start at? Started at 381.88 when zooming up to 554. And then started to clean itself up. Came back to the 38.2. And so an OTE short sweet spot from the move from 554 down to this low here, which was, what was that, 465. It looked good for a move back to this 510, 520 area. And so on the 15-minute chart, we can see that set up a little better. So that's this peak here, 554, down to this low, 446. The bot itself is simply a play off of bullish and bearish A, B, C, D patterns, as this document outlines. Where is it? There it is there. So what it looks for is it wants to see a double bottom, right, to sort of confirm market structure, you know. Then a rally up to from A to B, then a pullback from B to C, and then based on how far the pullback was, an ultimate rally from C to D. And basically the bot just breaks that point from C to D into quarters, and each quarter represents a level that you need to act on. So we had a little setup here where basically we had a big drop in price, and actually, you know, here is the chart with all of the gobbledygook. We can pull up a new chart, a brand spanking new one, just so you can see it nice and cleanly. And let's put on candlesticks. And let's go down to a 15-minute. And let's get rid of that for now. All right, so what I saw was basically a potential shorting zone. Up in here. So from these levels here, I was interested. We rallied up into this 38.2 and then backed off. And you'll notice, is this the right event? Do I have this right here? I guess that was it. All right, so the bot itself.
And I'm back.
Oh, hello. Didn't even know you were gone.
Yeah. I'd step out for a second.
Bot setup. Let's reverse that. You could just maybe go on mute. Appreciate it. All right. I don't know if this is right or not. Doesn't look right. All right. Yeah, actually, it was right. All right. So the bot setup basically says that if you get a bullish flagpole, which this generally was, that you want to go long from the 25%. So buy here. Which I did. your stop to break even at the 50% level. Stop to break even on this tag. And your target up here. And your stop to trail at this level. Alright, so I took the long, basically double bottom, took the long here, nice little consolidation. And then, like a fool, I went out and took my son to dinner. And didn't really monitor anything. Was having a great old time at Pizza Hut and playing in the swings and all the fun things that Liam and I do. And basically I missed a key criteria of my model. That basically says that if this level's hit 495.33, which it was comfortably, my stop which started out at 480.39, should be moved to 495.33. So that level was hit. I actually came back from dinner with Liam with the market down here.
Ruh-roh.
Yeah, so basically, came back from dinner here. So you can imagine my consternation. Basically, this was a valid setup. Stop to break even should have been hit. I should have been stopped out and walked away from the trade at scratch. So here I am, humming and hawing, humming and hawing, and humming and hawing. I thought that the most appropriate thing to do was that basically this was a mistake, right? And the best thing to do when you make mistakes, is to get out. So in essence, and I'm very comfortable with this decision, but I decided that I should liquidate at about 484, I think is where I got filled, so it was like right down in here. I liquidated and booked this small loss.
That saying ties in really well with Jesse Livermore's "If a stock doesn't act right, don't touch it."
Well, yeah, and so the way I look at this is that the model itself did basically what it was supposed to do, and quite often with my bullish and bearish flags, this event happens quite a bit. The good part about this, ironically enough, is that if you get these stops at break even, then you're going to book a whole bunch of just small little penny losses. And if you happen to book one of these bigger losses, then a whole bunch of these small little break-even losses actually forces your average losers to become smaller and smaller and smaller. So your average, like if you book like a one-tick loss or a break-even scratch or just a commission loss, right? Then that just brings your average loss size down if you happen to have one of these big stop levels hit. So that was the appropriate course of action on this trade, and the commentary I'm making today is on, okay, so you're following your trading plan. I deviated from my trading plan in that I didn't sort of monitor the situation and act appropriately, and I didn't have someone monitoring. Basically, the market spent 15 minutes, then another 15 minutes just giving you. So they spent like a good better part of a half an hour giving you that opportunity to move your stop to break even. So it wasn't like it was just in a flash. So I came back, realized the mistake, and so the question is, as a professional trader, when you make a mistake, what's the most appropriate thing to do? Now, this silly thing could have, it could have just fallen off the face of the earth, right? You just don't know what's going to happen. At the same time, the silly thing could have just turned and jackknifed higher. But the bottom line is that if I consider myself professional and I have a trading plan, then I'm not much of a professional if I don't follow my trading plan. So that's sort of the speech I have today. You know, I can show you lots of wonderful trades where they worked and we made lots of money and you go rah, rah, rah. If anything, I think there's value in seeing how a trade didn't work and what did I do as a professional in that situation. And I think it's interesting, I'll just finish off, the market actually gave me lots of opportunity to get out at break even. But I think the most appropriate thing to do, in fact, here's the gentleman I was speaking to. Let's see if we can get him to come into the room that I was speaking to during this whole process, and he can comment on it.
That's the it's the trades we lose that we should learn the most from, not the ones that win.
Yeah, you learn from them the most. That's a great point. And also how you handle yourself is also very telling, right? I mean, the irony of it all is that this was a half a coin, and this was what, $4. So we're talking about a grand total of $2. You know, so we're not talking a lot of capital. The question is, how do you handle yourself when problems arise?
You could be playing the 1 minute really well with that volume. I'm forced to play the longer ranges with my volume. I can't play the tiny ones anymore.
Because it's just too hard to get
fun though.
Fills?
A what?
Is it hard to just get fills?
It's hard to get safe fills. I mean, you can get filled, but you know the spread between those moves with that amount, you take on much more risk, you know.
All right. So that's sort of a summary of how the bot operated during that setup. And so we have our next setup, and that's sort of what I'm going to finish with today. It's just about 6 o'clock, so I'm running out of time. And that is, we got this rally off the bottom, as Landon sort of spoke about. I got a consolidation, so my bot has come alive again. And the bot simply says that off of this bottoming pattern, we want to buy at 491.95. Stop on the trade is below this low 480. Stop to break even is 503.90. Stop to trail 511.55. And the ultimate target here is 527.80. So I've been sitting in this trade. In fact, I bought the double bottom breakout right here. So I've been sitting in this trade all day, just sort of watching it. It's gone, first it went up a chunk, you know, went up, we bought it at, what did we say, we're in here at 491, so at one point we were up $7. Then at one point we're down $6. At one point we're up, hit 500, so we were up $9. And here we are just basically up $2, or I guess $1.50 on the trade right now. So it's fascinating to watch these bots play themselves out. Basically, I do eat my own cooking. Basically, I am taking these trades as they come along. Again, you know, I've got a half a coin riding on it, so it's not exactly like I'm shooting the moon here. But the point is, you know, I'd actually want to replicate what I do in the crude oil market, and you know, for the purposes of those that that were able to click on that demonstration tutorial on the bot there. Let's see, where is that? Yeah, this introduction to bot day trading. This is, you know, if you look at this chart that's included in with the slides, this is a very typical day trade that I do in crude oil. I've actually find that the crude market is a bit more fluid than Bitcoin's. Like I said, I've been sitting here.
Really?
Oh yeah, it's much more fluid. I mean, we've got all this sideways action. I mean, how many? This is a 15-minute chart, right? So
Yeah.
that means basically we've been, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I mean, so that's 10. That's what 2.5 hours.
Hmm.
So there's 5 hours. I mean, basically this thing isn't moving. It's driving me nuts. Whereas,
Well,
this crude oil chart in this seminar here, this is a period over maybe like an hour, 2 hours,
whoa, really?
and it produces the kind of
Wow.
trades that I can make a living off of.
Well, to Bitcoin's credit, that past 8 hours with that consolidation has also been while China has been asleep, so it's kind of like
Right,
our open and close,
right.
So
So,
it's like the market's closed
what concerns
right
me
now.
now, just looking at the broader perspective, right? So I've got this long on. Here's that OTE short sweet spot we've been talking about that's right up against this trend lines. That's sort of where I'm shooting for. This setup is a 3-to-1 risk reward that will get me to take profits at 527.80. So that would be basically a touch of the very upper end of the OTE zone. I'm not saying it's going to happen. I'm not saying it's not going to happen. I'm getting a little concerned, when I start reading the tea leaves and I see Willie this over, he's starting to threaten to get stupid here on the hourly basis. In fact, yeah, he officially is stupid. And MACD is in divergence here. And this silly $500 level is just a brick wall. So this will be interesting to see how it plays out. I mean, the great part about this is that quite often these bot setups work. And even though my personal feeling, my opinion is that they won't work. And I even say in this intro, when I turn myself into a robot, I trade like a machine. So I have to put away my personal opinions. I have to make sure that the risk reward always is in my favor, and I basically have to take the setups when they come along.
Well, maybe I can make you feel a little more comfortable with your setup here, because with all that consolidation, I mean that's about the time range that we've had with consolidation for quite a while. And in fact, we actually had the exact same consolidation time frame coming down to that double bottom range. And this is the Hubi chart I've got up.
Hold on a second.
And of course we've got the consolidation here, back and forth. But we also had it here on that run up, and even longer time frame for that original bottom, and then kind of a rising consolidation up at this level. So we've kind of had those ranges. In fact, I've got the exact same. I'm it's making me feel better that you've got the same target as me. I'm up here as well. Um, Now I'm not. I didn't set it as a short sweet spot just because of that bounce from the bottom and the potential. I mean, there's always the potential it could run that bearish trend line. So that's kind of my wild card I threw in there. But yeah.
Well, it's interesting how that trend line is basically right at my target, eh?
Mm.
What and what
Oh
I
yeah.
often see happens in the market is that these things start to overlap. So if we got a bullish ABCD, right, and hopefully you can see my chart, and the target just happens to line up right with a major trend line and an OTE sweet spot.
Hmm.
So you're getting a whole bunch of stuff that's saying, yeah, maybe we want to push up into this area. The only question I have in the short term is, could we maybe take, 6, 8 hours and just clean out some of the weak hands in here, right? That's the
Hmm.
only thing I'm concerned with. So, but anyway, long and short of it here is, like I said before, I'm best served if I just put my opinion aside and just go with the setup. So, I'm long. How are we doing here on the? Do I have? Yeah, I got it up here. Um, if I look at all of these guys, I don't see, it looks like Hubi actually made a new high here. So that's encouraging. Your Bitfinex made a new high. Um, so and this actually, wow, this stamp, this looks like it's trying to carve out an inverted head and shoulders. So this might be a sweet little breakout. If stamp can just jump its way above this 505, 506 area, then he's off to the races. Oh, let's see, yeah. So it stalled a little bit here.
There's a lot of low volume consolidation in this time frame.
Yeah,
I don't know if you've seen this chart before with Hubi, um, but you can actually see the basically the opening and closings of the day
yeah,
right in the volume. You
yeah,
see, you see how it drops off to nothing over and over
yeah,
and over,
yeah.
and then spikes and drops and spikes and drops. Is less related to price action and more to actually that. I mean, there's nobody trading at those hours because
Right.
everybody
Well, no
has to
volume
delay
equals
sometime.
no price action.
Exactly. So that's what kind of what we have right here with that consolidation is that whole run up from originally was right out of Hubi, getting up and buying everything they could and running the price up, and then eventually tailing it off right through here where we have that low volume consolidation. So it's definitely something for both of our trading plans to say, well, yeah, the MACD is trailing down and it's looking bearish, and the volume's trailing down. But then you also have the factors of the fact that, well, this is kind of like, well, after hours, basically. So I always try to factor that into whatever's going on,
Yep,
and
that's
whether or not I
perfectly
should
valid.
stick to a trading plan, this trading plan or not.
So, Darren, are you short right now, or are you just hoping for lower prices?
No, well, I'm not short because I don't borrow other people's money, but I'm in fiat at the moment. Yeah, hoping for it to go down.
All right. So, you be quiet. Go away, you. I'm just playing with you. Yeah, is this one of these we're grabbing the bottom no-brainer longs? Um, for me, I'm actually feeling as though that's not the case. This has got a bit of risk associated with it, especially the fact that there's, I know the other ones don't look the same, but for the BTCE right now, we got some funny gap action down here that leads me to believe that we're not done testing that area. But my hunch is kind of like what Landon's thinking is, we've kind of got a trading range established here now. And basically my vote is that we had a burst. Usually these things come in twos, and right now we're just going through the trading range consolidation phase. So we should get a second leg to this burst. The question is, do they run me out here before that second leg comes? All right, so
I'm fairly.
Landon, I guess I've sort of said my piece. It's now 6:15. I know you said you didn't have like too much in particular that you wanted to talk about. Here comes Mr. Bull, so we got the bull in the
Hey!
house.
Hey, I've been shorting all the time.
But do you want to take 10, 15, 20 minutes, whatever, and do a nice little presentation of your thoughts here, Landon?
Yeah. Well, and I want to put a little more of this together at some point, something a little more in depth. But here, let me pull up the chart here. But I was talking to some people over, I believe, at Bitcoin markets, and they was asking some questions, and we're explaining different patterns and different ideas, and wanted to kind of correlate to what they mean on not really as you as a trader, but as all the other traders out there. Because for me, how I see a lot of things is, and how I was telling Brian, is I see all of this price action, all the charts, everything else, like an ancient battlefield. And if you know anything about history, anything about ancient battles, really the blood, the kill count really was never in the actual infighting, in the battle itself. It was it was at the point at which lines broke and one side routed and the other side advanced. That's when the killing began. And I see that a lot with the fear and the greed side, the bull, the bear side, where you have a lot of this consolidation, as you could see right here before the dip. I mean, you could call that essentially the battlefield. I mean, not much been really taking place. There wasn't a whole lot of volume, and anytime you have stuff like that, those consolidation periods, you're essentially the market itself is trying to figure itself out, and trying to figure out which way the battle is going to go per se, and as we know from experience, usually it follows the trend. You know, don't fight the ticker. It continues on down anytime we have a consolidation. At the same time, for any flag or pennant patterns, it's always really popular. That drop off from the 590 range is a good example, to where we had that infighting with the bearish pennant. And it's a very similar scenario there, where you have pretty much the only difference is for a bearish pennant is you have those extreme ranges that are finally coming up to a point. You have both extremely in the beginning you have both extremely strong bullish signals, and then you have extremely strong resistance at the same time. You have both sides essentially fighting it out, duking it out, and then only one wins in the end. And as we know from experience, for that particular price pattern, it continues on down. The bulls end up losing those battles most of the time on a bearish pennant, and they end up routing, and there's always more blood. And we usually see, of course, and equal measure from that scale as well. Now, I was explaining to one guy over in Bitcoin markets. Essentially, we got those V patterns, or well, won't mention what me and Flipper like to affectionately call them, but we've seen them a few times over the course of this last bubble in price action. We saw it. We saw it after the original China crash. We saw it with the GOX crash, and then the last part of the China FUD bans Bitcoin again crash. And essentially what you're seeing here with that sort of price action, and I think Brian will have to interject again with his talk about institutional investors. But basically, smart money ends up loving these positions, mostly because of the high volume and the low prices at the same time. What keeps that that pattern the way it is, essentially, when you have that heavy pressure coming down, that sharp movement coming down, and at the same time you have an equal and opposite measure both in the opposite reaction. What the market is essentially saying is there is a huge amount of buyers at this price range. That basically people are pulling out all the cash that they have available at that point to buy everything at this level. once it's gotten to that range. So and I know Brian's talked a lot about institutional investors also liking those ranges. It's also good for a lot of your bigger retail players that have uh, bigger volumes to contend with, because it's much easier to get filled in that sort of event. So, but continuing on, let's see. Um, what's another good one? I pulled up essentially. Yeah, here's that example. You're talking about the flagpole earlier, uh, and then and I want to really get in more in depth into kind of the psychological aspect of the market with with these different patterns, because I know a lot of traders will just watch out for these patterns because they know what happens after the fact, but there's a reason why they happen in the first place. For instance, the idea of support and resistance in the first place. You have basically, this support level. I mean, we know that much more people want to buy at this level, and anytime you have a turn in a different direction, of course, nobody wants to buy something that's not going to get past a certain level from where they bought it at. I mean, we're all on the trading side of it in a zero-sum game. Now I know Flibber is a big proponent of this, and so am I. It's one of the reasons why I'm trading Bitcoin itself. But let me go back out here to Bitstamp. But I'm a very strong believer in Bitcoin's long-term potential. I, like many others, see this coming to an inevitable end where we're going to have another large rise up and another parabolic rise. But unfortunately, even though I've watched Bitcoin since 2011, 2012 with my programming buddy, I finally got in this game around the 700 level. So I've missed out on all the free funds. So that's where the little harder work comes in on the bear side, and it's of course not a bad thing just to buy and hold, but there is so much opportunity in all of this price action. If played well enough, you could say it's much more opportunity than the whole parabolic move up in the first place. And you have drop-offs in 50% moves on a routine basis throughout a year. I mean, this is a trader's dream right here. But what we've seen though with those V patterns, those strong reversals time and time and again, is basically a rejection of that price point. Basically, no matter how bad things get, over and over and over, the whole market can all get behind the fact that, hey, a lot of people want to buy 340. So that makes it incredibly difficult to say that 200 would be an option. Now, that's not always the case, because that market sentiment can always change. If we can never get past, say, the 540 range and try over and over and over again as many times as the market wants to, if it can never breach that level, nobody's ever going to want to buy up to that point, which is why we have support levels, which is why we have resistance levels in the first place. I mean, this is all, for the trader side, it's all a zero-sum game, and for somebody to win, somebody else has to lose. Except, of course, in this whole exponential growth side of it, which is the investor take to it. But just on the trading side, if I'm winning, there's somebody else losing on the other side of it. So that's with those support lines, with those resistance lines, that's where you have to kind of move with the flow. That's where sayings like "don't fight the ticker" come into mind. So usually, regardless of what you want, the market's always right here. And what's, let me pull this down. So what could eventually break it past this point? Well, I mean, basically this trend line. If we continue to make lower lows, the market is essentially telling us that we're still too high. We're still too high. We're still too high. We're still getting rejected over and over and over on a consistent basis. And that's where those eventual, basically, exhaustion points come through with one side of the battle breaking in equal or opposite directions. And I'm just kind of, I guess, ranting at this point. I didn't prepare as much as I needed to. But yeah. Any thoughts, guys? Brian, you there?
Yeah, well, I'm just enjoying the show.
Well, that's about it. I mean, I don't have much else except kind of the banter and different ideas that I think of on a consistent basis.
Well, again, what I want to, and we talked about this at the beginning of the show, is I really like to know what's going through people's heads to make them potentially pull the trigger.
Mm-hmm.
So, like our little demonstration of the bullish momentum divergence setup there, I thought was beautiful at the beginning of the show. It's perfect. So, Any new viewers, any new people to the Bitcoin world, you want to see what a really good-looking trade setup looks like, rewind your video and watch the first, what was that? I guess that was the first half hour or so of our conversation tonight, eh? So, all right, so it's about 6:30 now. We've covered quite a bit of information. We've talked a bit about our psychological frame of mind through the setups and how we sort of handle the anxieties of them. I suppose what we could do, if you want, because we do talk so much about Bitcoin, I suppose one of our shows wouldn't be complete without maybe at least a 30-second plug from Flibber. What are you up to these days, Andre? Are you long? Are you short?
Woo!
I've just got a sob story from yesterday, and that is when the price took its last leg down yesterday. Willie 15 minutes said buy, Willie 1 hour said buy, MACD was bullish divergence across all the exchanges. I bought. China dropped. China made a new low, and it was 5:30 in the morning. And I said, "Do you know what? I'm not going to bag hold this. I'll just have to go to sleep anyway. Maybe I'll pick it up tomorrow." That was at 470. 477. It stopped dropping at 475, which is unbelievable. And then I woke up the next morning and it was 495. So I was right all along. Yeah. And then when this rally happened today, I knew it just looked pathetic. The rally did. It was really bad. There was just bearish divergence all over it. I shorted pretty much the top. Cashed in 496 today. Just fell asleep at 6 p.m. last night. Woke up at 2:30 a.m. this morning, ready for China time, and now looking to see what's going to happen for the rest of the day. I don't know what it's going to happen. Maybe we're going to go up.
Yeah, that's why I was saying we need a like a phone tree for that kind of stuff, because I remember Flipper telling me getting out of his long position, and I saw the thing starting to rally, and I was just like, oh no, he went to bed like an hour ago.
Yeah.
I was like, oh crap, he's going to be so pissed in the morning.
Yeah, I knew it all along as well. I just knew it. I just knew that if I just thought if I let this go, I just know this is going to go up, and it did. It's just unbelievable. But hey, look, I mean, I'm not in love with this right now at all. You know, not in love with this at all. This rally. There's a lot of talk of 690, all this stuff. I'm not in love with this. I think yesterday we spent 12 hours fighting to go from 500 to 505. That's a long time. I don't know. So I'm not in love with it right now. So we'll have to just see where it goes, I guess.
Yeah, neither am I, man. And I'm the one with the, I've got freaking 60 coins on this long position, and I'm just sitting here, and it's just watching the individual ticks, and I'm just like, oh, come on, hit my target, please. Just do what you're supposed to. Because I'm in the money right now, but I do not want to close it because it goes against my trading plan. Even though this is kind of looking pathetic.
Well,
I'm going to stick to it.
For me, all my levels are predetermined. So, I know. And what are you trading, Flipper? Are you trading that Bitfinex?
Yeah, I'm on Bitfinex now, yeah.
Okay. So, because when you start quoting numbers, I got to make sure I know which exchange you're talking about. But for me, I mean, it's tough to sit and do nothing. But for BTCE, I don't actually get to do anything unless 503.90 is traded to or 580. So right now, I just sit here and just twiddling my thumbs.
Well, I mean, if you just look at my screen for a brief second, this is what my current thought is. This is the hourly. Willie's up here right now, but that's not really to say much because Willie was up here. So in these trending markets, he could stay up there for a long time. But still, it's a little consideration. I haven't checked the other factors yet, but OTE short sweet spot is right here. And if you look at all the resistance we're up against, look, we've got these tops here. We've got this top still to cap. We've got loads of, a lot of GAN angles to cut through here. So I think, and this is kind of like my ultimate high. This yellow one up here, kind of 560-ish. I don't know that yesterday 12 hours just fighting this one particular zone. It just seemed a bit this in total, this whole area is 24 hours worth of fighting.
Yeah.
And so it wasn't like impulsive surging. Like before, it was like.
I was telling Landon that earlier. I was like, my typical crude bot trades, maybe they last like 45 minutes. I've been in this silly Bitcoin bot trade here now for about 5 or 6 hours.
Yeah,
it's just driving me nuts. But that's a trader's life.
Hey Brian, what do you think about this ABCD? I've done it off this one. Would that be legit? Or?
If you look at my chart, right?
Yeah.
I think that's basically your same target.
Oh yeah.
Here's the hourly chart. So
at least we all have the same target. It makes me feel better. If anything.
Everybody in the sun will have that target, won't they?
Well, that's just it, right? I mean, really, you could argue that we're still fighting at this 38.2. You know how much I love that, right? Mm-hmm. So I could easily make an argument. Yeah, we're just messing around here, and if we start to lose this trend line here, which just so happens to be 13 EMA, then look at Willie on mine. Like Willie is saying, hey, this is not happy, and look at my momentum indicator. I mean, this latest push higher was on nothing. There was no momentum.
Oh. It's even more diluted on Hubi because I was trying to show Landon. Landon was telling me that this was going to the moon.
I was not. No, that was Ron. That was Ron Swanson.
But yeah, I mean, you look at this last one on Hubi. I mean,
it's making me sick.
I know momentum was all there on that first move, and it just completely and utterly just fizzled to nothing.
Yeah,
You
and
know?
now we've gone negative there.
Yeah, and this last push up, Bitfinex was going a bit wild here, and I was like, guys, this is ridiculous. I said to Lando, I said, just bank at 504, and you get back in 597, 507. I said you bank $10 profit there at 597, 497. So it was just
You guys
obvious
are
that
so
I should have.
good.
I would have made a good $10 move there, but
yeah,
it was
you,
just one of those things that after breaking so poorly from my trading plan in the past week, I just wanted to sit and stick with it,
Hindsight's always 20/20, right?
Yeah. So I needed to cool off basically and practice a little discipline, I guess, more than anything. Because I even had the opportunity to close it at 513. 513, yeah. And I didn't do it. And I was up like $3,000 at that point.
I got a price
And I was
alarm
like,
saying
nope, my target is upward of 520. What?
I got a price alarm to say it went that high, and I was like, oh my god, this is ridiculous. Asleep.
So
All right, so I just went to the Reddit thing and I logged in and I clicked on the up thing here. Is that what I'm supposed to do?
Yeah. Hey, we got a lot of upvotes last time, Brian.
Well, that's good. All right, so it's 6:36 now. We pretty much talked this thing into the ground. So thank you very much, Flipper, for adding your commentary there for us, coming in at the last moment. And, oh, what the heck's going on now? Look at all this crazy action. Anyway, where I am, I'm long right now, and one of my bots is just working away, doing its thing, basically sitting at cost right now. And I guess what I'd like to do at this point is we do have actually quite a few people in the lounge now, so thanks guys for dropping in. Julian, nice to see you again. Eric, Darren, always a pleasure to have you. Bodhi, it looks like maybe a new participant, so hello Bodhi. Sorry I had to put you on mute there earlier, but we're right in the middle of our spiel. I suppose now we can open up the floor to questions or comments or concerns, and I'll just take a quick boo at the YouTube page, see if there's any questions here. Looks like I don't see anything. I think we're okay.
It's a slow weekend.
There we go. All right.
Everybody got all excited, and then now they're exhausted and off to Easter.
Pardon me? Say that one more time.
I said it's Easter weekend, so we got fewer Western traders, and China's not awake yet, so it's dead. It's dead as a doornail.
Could be. I mean, and that's that's the irony of my little bot, right? Is it just sort of tells me to take a level, and quite often, you know how I kind of was just there a few minutes ago. It's like, oh, no, I should have just talking myself out, get out, right? And it's through the dead market, and then the market takes off, and you look back and go, damn, why did I do that? Why did I do that? Why did I do that?
You were detailing Flipper's last experience.
So anyway, you guys are much better at catching knives than I am. I'm horrible at catching knives. So that was a great trade that you detailed earlier, Landon. So congratulations on that. I'm very impressed with that.
Thank you. It's about time I had one, at least. Well, you got to be right sometimes, right?
Well, they say a broken clock is right twice a day.
Yep.
Yeah, there you go. Thank you very much. So, on that note, do we have any questions? So the panel is open. If you have a question, fire away. So now's when I need that. Somebody puts the crickets. Now's when I need that elevator music, right? We need probably like a good 20-30 seconds of some cheesy elevator music. All right. Well, If not, then basically we're
Bueller?
basically on schedule. Oh, did I hear somebody?
Oh no, no. We got something. So, oh, okay. Hey.
How do you
Dude,
find
put
the
the mic on.
market for long term? Well, my recommendation for you, Bodie, is to follow my S&P 500 blog. And it's funny that you mentioned that because there is another gentleman in the chat tonight. He and I are working diligently to bring this out to the investing public because I think there's a lot of value in it. But I run a simple model off the S&P 500, and it actually right now I actually have the blog as a free service, and my partner here is suggesting that we start charging people for this. But I've been running this blog since my first entry here was back in 2008, so that's 6 years now. It's absolutely giving you phenomenal signals. Here was the market meltdown, 2008, 2009, and the model actually told you just on a simple signal to get out back at the end of 2007. And you didn't actually get out at the top of the market. That's the interesting thing, right? I mean, you left maybe 5% on the table, 10% on the table for the rest of the gang, but clearly the market told you to get out here back in 2007. So there was lots and lots of warning. And then find it fascinating that the blog told you to, and here's that bear market. The market actually told you to get back in here in April, May of 2009. And that signal has worked phenomenally well. In fact, it's worked so well, there was one brief crossover here where it told you to get out, but then it told you to get right back in at basically the same level. And then it gave you a phenomenal trade right up into this seasonal peak, late August, which is typical. It told you to get out. And then later on, told you to get back in. And this buy signal here from November 2011, this same single buy signal is still working today. So here we are, 2014. You can see the moving averages have yet to cross. And what's fascinating is that the talking heads will get you to act, and yet this very simple, we call it the time-tested investor signal, it really has absolutely no interest in crossing right now, and I would argue that we're nowhere near a bear market. So equities are still the place to be. Does that mean that this is a good time to start putting new money to work in the market? I don't think so. But the last buy signal way back in November 2011 was spot on. And so basically that's what this service just details. It details how traders should be stanced, how investors should be stanced. Basically gives a nice rational overview of the market. We like to look at things like the U.S. yield curve. So, the yield curve itself will give you lots and lots of warning of market meltdowns. You see in 2007, the yield curve was actually starting to invert here. Which is in itself, whenever you see that happen, that's a classic indication of recession on the way. So, there's lots and lots of tools, and like I said, my associate has decided that we need to start charging people for this information instead of me just giving it away for free. So take advantage of it now, Bodie, while you can.
And I think one of the things maybe Bodie was asking about, and correct me if I'm wrong, but basically on the finding a good place to enter the market. I know you, Brian. You have a set criteria of the individual kinds of stocks and commodities that you're looking for. Or basically equities that you're looking for, and then within that criteria, you then take those charts, take that data, and then do all the TA legwork on them to figure out whether now's a good time or to maybe that this is something that you should set aside on the back burner and take a look at later.
Well, what's really interesting is that a lot of models, like one model that's really popular is called CanSlim, and it was developed by a guy named William O'Neill. Very popular stock screening model. And one of its key components, the M part of CAN-SLIM, as market criteria, is broader market direction. I guess the way I would look at it is we are in a bull market. The problem is are we actually at a buy level? We're long way away from the last buy level that was given. So, on balance, the stock market itself is actually pretty risky, and you really want to see some sort of big washout. And, again, if you read my little investor blog, that S&P 500, which we're going to be charging for shortly, right, Julian? Anyway, one of I use a whole bunch of sort of little helpful tools. And one of the tools that I'm a big fan of is the January barometer, which we have linked here. And the January barometer, it actually says that we're in for a pretty nasty fall. Something ugly is about to hit the market. But the fact that the stock market is a long way away from where it, last buy signal was given. Couple that with, ironically enough, people aren't really worried about stocks anymore. So investor sentiment's pretty positive. And then couple that with what the January barometer is suggesting. And, I think we're probably going to get that pullback that'll give you the next buy signal. I just don't think now is a good time to start plowing new money to work in the market. And, that's the dangerous thing, right, is people will come to the market this time of year. This is exactly when the market's supposed to be hottest. And so that's right on cue. So, when I was a broker, we did most of our new business was into the May peak. And the irony of it all, right, is that those people that know the stock market, they're selling in May and walking away, right? So, I mean, it's just, the longer you play this game, the more you realize all the traps that are laid. This is a typical seasonal trap. And this is exactly the time when someone like Brody should come up and say exactly that question. And all the newsletter writers are just salivating, going, "Give me more Brodies, give me more Brodies." I want, or Bodie, excuse me, I'm mispronouncing your name. So be careful, go slowly, right? My advice, if you're asking for advice, is to do nothing with your money. Just leave it in cash and wait for some serious pain, right? Because usually the best buying opportunities is when there's lots and lots of pain. Like an excellent, simple, and my little blog, I'll be all excited, but my simple indicator for when to buy the stock market is when Time Magazine, or a major U.S. publication, talks about how bad the stock market is. And you think, oh, well, that should happen all the time. But it doesn't really happen all that often. And you can literally set your watch to, all right, there's been a major publication. And usually it comes out in like October or November. And that, ironically enough, is a really good time to buy the stock market.
Like the old quote goes, buy when there's blood in the streets, even if it's your own. And then Andre Flubber wrote in there talking about Bitcoin price action. Anytime you see the suicide hotline posted on Reddit, that's a big buy signal also.
So Bodie, that's an excellent anecdote. When I saw that, that basically just was like, I mean, it's sad. It's a really sad commentary on the world that we live in. But when it comes to investing and making money, I was taught this years ago. You want to be buying when others are selling, and selling when others are buying. I find it incredible how Well, okay, so with BTC, I find it fascinating that I did tutorials on this, and I talked to people about where institutional levels are and all that. And really, when it comes to BTCE, we really do the specific analysis on Wednesday's show. So really, today's show is more about trading plans. If anything, what I find fascinating about the whole investment process is that you can do your analysis, you can pick your levels, and they can be really smart levels. But the question is, at the end of the day, if and when those levels are hit, are you going to act? And so, I just recently witnessed an example firsthand of we did a lot of due diligence. We came up with some pretty good reasons why a level should have been bought. That level came and went, and it was just through trade mismanagement, not through analysis, not through actually thinking, just purely human emotion and how your emotions, ironically enough, take over, that the trade had ended up playing itself out not the way that we expected. So, and the sad part about it is the market actually did exactly what we sort of forecast. So it just drives you nuts. So
Poor Flipper.
Oh, it wasn't Flipper. The person's name will remain anonymous, and they know fully well who they are. But
I did it 3 times in a row this past week, so I already got my comeuppance.
Right. So, I guess, Bodhi, what this speaks more to, and that's sort of the purpose of today's show, is my advice to you is figure out what it is that you need to see to justify doing a trade. And that's my whole course. I mean, basically, I wrote a course on this exact topic. Taking yourself from, I got some money and I like to play the market, to actually being a professional money manager. And a big part of that is creating a trading plan and creating, I have a whole section of this course, part 4 of this course, is just all about building trading plans and then treating this like a business, because really I don't think enough people consider investing as a business, and I think they should. And if you look at it like a business, the first thing you're going to think of when you go into business is, what money do I have to spend? What am I risking? So take the time, and that's basically all this course material I have in my seminars. You're more than welcome to go to them. They're still free. They're not going to be free for much longer, but they are still free. And really learn about what type of person you are. What type of investor am I? Am I a knife catcher, or am I a trend follower? Or I don't like to take that kind of risk. Keep in mind, the knife catchers, they get rewarded the most, but they also get stuck the most too. So we
got to cut our losses quick.
Well, yeah, that's a commentary on what kind of person you are. Are you an investor? Maybe you're not even a trader. Maybe you look at these day traders and you go, you guys are nuts. Maybe you want to look at this like maybe once a week or something. So, decide what kind of time and effort you want to put into this. And it's better to go through all of that process and create a trading plan and something that you can work with, and that, you can look at it. It's a one-page document that summarizes exactly what you're going to do, why you're going to do it, how you're going to do it, before you spend your money, right? The irony of it all is people get a big chunk of money, and then the first thing that they think of is, okay, what am I going to go spend it on? So ironically, if anything, it's probably a good thing for you, Bodhi, that you're here today, because hopefully I'm going to steer you in the right direction. Do all the homework first before you spend a penny. All right, enough of that. All right, so we had a few other people popped in here.
Yeah, this whole thing got filled up at the end of the show.
I told you how it happens. That people just trickle in over time. That's just the way it goes. So I see Ricky, welcome, and I see Gianfranco, welcome, and Eric, I think we touched on you earlier. There's Jace Barron, nice to see you, Julian. So we've got maybe about 5-10 minutes left. If you have any specific questions, now's the time to get them in. We're going to probably wind up the public part of this presentation here shortly. And I see that, well, let's see how she's doing here. Hey, I'm back above water. Look at that. So look how the trade is teasing me. Look at that. We got a little bit of a rally going here. So this is fascinating today, eh? So talk about trader psychology, right? So I put the trade on off the double bottom. I'm in the money. I'm out of the money. I'm in the money. I'm out of the money. I'm in the money.
The best thing to do at that point is just walk away and not look at it.
Oh, exactly.
Yeah.
And, like I've gotten to the point because I trade this bot every single day on crude oil, right? I mean, I live this thing. So I've gotten to the point where I'm not even really that concerned. I'll get concerned if and this is what I put here, right? Stop 479.98. Just as simple as that. That happens, I'm gone. Right now, I'm just sitting here doing a fun YouTube show and hopefully teaching a few new people how to invest correctly.
Hey, well, maybe real quick I can ease your feelings. Take a look at this. It's kind of neat how
Bye.
Got that? Yeah, we got that.
Look at that!
Bottom there.
Look at that! Just as I'm talking, they slammed it back down. They were saying, well, Brian's not paying attention. We can rally it a little bit here. As soon as I said something, bam! Okay, so what am I looking at here, Landon?
This will make you feel better. I mean, we've had that consolidation at this level twice. We had the double bottom there, and then notice with this whole bullish move, an interesting thing, and I've actually been trying to figure this out. So maybe you can educate me on a tool that I use a lot. But notice how with all these pumps lately, the successful ones, because this one, as you can see, is much different. But with the successful ones that had a following rally after the fact, another measured move, we had the jump up on the MACD histogram, and then notice how it trails off through that whole time frame. So the histogram's actually trailing down very, very slowly as the price action has been moving up through this range. Do I get the right one on? Yeah. You see this right here? And then the same thing, once again, happening with the second measured move up. Much smaller, though, trailing back down. And now, once again, we have the spike and the trail. So now, I mean, I know the MACD pretty well, but and we also had it coming right off the very bottom as well. But I just noticed that was a very interesting formation for me in this whole bullish rise, and it always seemed to indicate that another measured move via the MACD, another measured move was in the cards, and seeing what you thought, and if you or Flibber had any explanation as to what you thought was going on there.
Me personally, I get a funny feeling there was some sort of harmonic event into that full moon.
Well, what? This happened like multiple times, like throughout all kinds of stuff. So it's not just one spot.
I would argue that the harmonic event built to a climax, and the full moon event was the end, was the climactic end of that sort of event, right? And what I see, like Flibber was talking about the symmetrical contraction. Each leg higher was almost perfectly symmetrical with the previous one. I'd be willing to bet that there's a Fibonacci sequence somewhere in that event, and the trailing down of the momentum, you notice that the actual number of bars, it almost looks like it's a perfect geometric progression, right? And almost, the fascinating thing about nature is that the more symmetrical it looks, the more significant the message, right? So, the fact that the MACD was
That's
trailing
why I'm trying to
off.
figure out what's going on here.
Well, okay, so what specifically, right, is going on is that you get your initial sort of knee-jerk reaction, right?
Mm-hmm.
It's then kind of like, when you throw a rock into the water, right? The initial splash, right, creates a big wave, right? But as that wave dissipates over time, where am I going with this? The amplitude decreases at a very measurable rate. So what happens is you have your first initial reaction, sort of like the rock going kaplunk, right?
Mm-hmm.
And then the market is sort of like playing catch up. So what ends up happening with the MACD is the histogram itself is the difference between the measurement of the two moving averages and the 9-period exponential moving average. So the initial kerplunk, right, the big spike, it's going to pull those away.
Mm-hmm.
And then as that event dissipates through time, those two moving averages are going to slowly converge again. So that's basically what's being visually demonstrated on your histogram.
Mm-hmm. So basically, that being said, what we had was basically a very strong rejection of those moving averages. Then.
The initial, so the
slowly trailed off. I mean, it took a while to get there.
Well, so the zero line is basically is the moving average relationship above its 9 EMA or below its 9 EMA.
Mm-hmm.
So the initial knee-jerk reaction up obviously takes it above there, right? And then, it's kind of like the rubber band. You can only stretch the rubber band so far, and then it's got to snap back.
Mm-hmm.
So that's basically, what I'm seeing, though, is if you pull out to a higher time frame, you see that all of those little waves, right? Now, I notice you can actually count the number of waves in the MACD,
mm-hmm.
and they often correspond with that Elliott wave sort of thinking. So if you go back to that 1 hour,
there we go.
Go back to your 1 hour.
No, it's there.
All right. So the first initial wave, move your cursor to the left. Right. So if you do your Elliott wave count, oh no, back to the right a bit. That first initial pop, right? So there's the start of it, right? So now count the subsequent waves, and you can go 1, 2, 3, 4, 5, and after 5, cycles, Elliott wave would say, okay, that move's come to an end, and I would argue that the MACD basically says the same thing.
Mm-hmm.
It's the histogram is visually showing you the dissipation of the initial knee-jerk reaction higher. Mm-hmm. And so us as traders, what we want to identify is when price gets to those end points, right, where it's an extreme, and where the price itself keeps moving higher, but the dissipation, the ripples of that kerplunk, the initial kerplunk was very dramatic, right? Now that we've gotten to like the fifth wave of this move, that initial burst, the reason why it moved higher, that's old news now, right? And yet price is still moving higher. And so that, as traders, we want to identify those events. And what a coincidence, that was like right on the full moon.
I see. Notice the histogram here at that last wave. I mean, in comparison, it looks pretty pathetic. Actually, I mean, it's just. I
It
mean,
sure looks to me like they goaded the public into getting long.
yeah.
Like I see a double bottom breakout on the volume
Hmm.
into that event, and I see a very small little MACD double bottom there. And you see how the MACD indicator tried to push to new highs. So that to me, that just spells trap. That was a major, major trap.
Yeah. Well, and then we have, of course, the reverse on the bullish divergence coming back and losing momentum for
Look
the
at this
bears.
silly thing. What the heck is going on here? Look at my BTCE now. Look at this up bar and look at the volume coming in. Oh, Lord. Never a dull moment. Oh, look at Hooby. Hooby's trying to break out here. Go, Hooby, go. Go, Hooby, go. Go, Hooby, go. See, and isn't that hilarious how, earlier in the show I'm like, oh, this damn trade. And the best thing to do is just don't touch it. The setup is in. The setup's working. Just let it do its thing.
Man, in comparison to commodity trading, I think you might be stressed out by all the fluctuations in Bitcoin.
Well, keep in mind, right? I'm trading a grand total of a half a coin here.
Yeah.
Even if my stop was hit, which is would be an 8 from 491.95 down to 480, so that'd be $11. I'm risking a grand total of $6 on this trade.
Mm-hmm. How do you think you would react with 30 grand?
Well, to be perfectly honest with you, if I was a professional trader, it shouldn't make a rat's ass any different. And really, my opinion is irrelevant, right?
Mm-hmm.
Oh, look, they whacked her back down. Really, all that matters is that you have a trading plan and you stick to your trading plan. So my trading plan was to buy the bot and just basically trade the bot. So very easily they could run down, boom, hit my 480 stop. Somebody watching this video says, let's go screw him over, run it down to 379.95. I'm stopped out. And then start the bull run. That could very easily happen.
I don't think we're popular enough to screw ourselves over with our trades yet.
Well, the good part about it for me is, and really this is the way it should be, is I'm eating my own cooking.
Yeah.
That was a big problem of mine for a long time. Is I just didn't have the self-confidence in myself to actually allow myself to eat my own cooking. So go figure. Try to figure that one out. All right, guys. It's now 7:08. I think I'm going to wrap things up. I think we had a pretty good session tonight. Were you happy, Landon?
I guess.
Were you happy? Did you have a good time? I don't know.
Yeah.
You remember I talked to you earlier. I said the number one thing here was to have fun.
Oh, yeah.
So if you had fun, then I reckon we did good. All right, so this is our moniker. I think we.
Hey, it's Johnny Blue. You're late.
Yeah. Basically, we're. Well, I think we stayed on task, so I feel pretty good about that. Somebody's got the sound effects going. This was CRInvestor and LowPro's Trade the Plan show for Saturday, April 19th. We had a nice little conversation and talked about a great little long setup in our intro part earlier on there. Landon showed us an excellent long that he had on. I talked a little bit about risk management strategies. I talked a bit about my 2 rules of investing. And trade setup that I actually made a mistake on and how I acted. I've also talked about a setup that I happen to have working right at the moment and how it fits into my trading plan. Landon talked a little bit about his recent trading psychology, and some of the metrics he likes to use. So I was really pleased and honored, I guess, to listen to his input. We heard a little bit from guest Flibber talking about his adventures in Bitcoin land, and we talked a little bit about with some of our room participants about what a new investor ought to be looking at and thinking about if they're thinking about participating in these markets. So I hope you all had a good time. We're well over the 2 hours now, so I'm very pleased. Basically, we filled out a nice, robust show. Lots of value for anybody who's sitting on YouTube wondering what it is that they're actually watching. So I think you got some good value about the show today.
And if any of you guys in the Hangout missed some of the first part, you could see the rest all saved on YouTube.
Yeah, all the links are available. You can follow me. I don't know whether Landon has the links, but if you follow me, my Twitter feed has all the links on them. As well, we do have a page specifically for these shows that we produced. So thanks for the heads up there, Landon. I'm going to do my little commercial plug just because it's who I am and you love me for it. So I do run a website called the Canadian Rational Investor, and I'm actually in the process now of converting this into a bit more of a 21st century platform, and thanks to Julian for all his hard work on that. Don't do this for free. Well, I do it for free, but would love any contributions. If you found anything helpful, you can always go to my website and donate either through Bitcoins or if you like to do the PayPal. There's lots and lots of services and features. Hopefully I've highlighted tonight, and I highlight on every show that this website has, and 99% of it's free. I do have seminars that I run, tutorials, I beg your pardon. So if you want or have questions about any of the stuff you have on my site or any of the topics on the shows that are covered, feel free to bug me through the tutorial sessions. You can get a hold of me. Usually I'm on TradingView, so you can always PM me that way. And you can get to that calendar just by clicking on the link on my page. Other than that, thank you very much, Landon, for your input tonight. Always a pleasure to talk to you. I'm very impressed with your professional demeanor and input. Thank you, Flibber, for your input tonight. Andre's always a treat to listen to. Thank you to the room participants. Thank you to YouTube and all the wonderful people that make shows like this possible. So have a great night, all. Have a great night, Andre. Have a good night, Landon, and anybody else in the room that happens to be listening. And we'll see you guys all again next Saturday.
Oh, you guys don't have to leave, by the way. Oh, and there he went.